I can create, and I have created a predictable investment portfolio that gives me all the things that people are wanting, right? Capital preservation, income, growth, tax advantages, just by investing in different classes of real estate and different, and in different.
What's going on, everybody? Josh Weidman here from Hard Money Bankers. Thanks for joining us for today's Market Maker broadcast. I have a repeat guest with me today, Tom Dunkel from Bellrose Storage Group. He's the Chief Investment Officer. We were just talking off the air, discussing a couple different topics, but today I'd really like to dig in. Since last time you were here, we really got into your background and how we bumped into each other 20 years ago. And, now I'd like to kind of talk about where you're seeing some of the commercial finance going. And, we both shared some stories about, some things that are happening in the market. So, Tom, welcome. Thanks for joining me today. And, so what's new, man?
Yeah. Hey, Josh, it's great to be with you again, buddy. A few years ago, right, money was flowing pretty freely. In fact, we did a deal out in Kentucky where I was a small local lender, and they wanted to lend us 80% loan to value. And, having survived the Great Recession many years ago, we actually turned that offer down. So we said, hey, you know what, our numbers work just fine at 75%. And back then it wasn't hard to see that, we were going to have some challenges in the near future. If you have any experience at all as an operator and in the finance world, we knew something was coming. We didn't know how bad it was going to be. So we said, hey, we'll take 75%. And I think the rate was at like 4% or something. So, so that was, in retrospect, a really good decision, because then, of course, as rates went climbing, interest rates went climbing, and the economy slowed down, and throughout the self-storage industry, occupancy came down, rental rates came down. We were really glad that we didn't have that extra 5% LTV hanging over our heads, because that facility is doing fine, it's bumping along, but if we had some more debt service, it would have just made things that much more challenging there. But
getting the money you need to fund your next investment project can be a daunting task. There's the paperwork and the applications and the authorizations and the appraisals. And just about the time you think you're ready to go, the lender comes back with another long list of requirements. It can be exhausting. At Hard Money Bankers, we make funding your next project simple. Our same-day approval process and low-doc lending requirements means that you can focus on what you're best at: finding, rehabbing, and selling real estate projects. For more than 17 years, we've reliably provided loans to help investors make more money. Our easy process and fast funding set us apart from the competition, and our transparency and clear communication has built trust and long-lasting relationships with our clients. If you've had enough of the runaround, give me a call today. With just some basic information, we'll underwrite your loan and put a written quote in your hands. Get approved today and get funding tomorrow. Call me at 717-213-8488 or visit us online at hardmoneybankers.com.
Fast forward to today, Josh, just before we came on, I was telling you about just a small $500,000 expansion loan on a facility that's worth close to $5 million. We're just doing a little expansion project on the lot there. And man, you would have thought we were asking for $500 million, not $500,000, because the questions and the scrutiny and the back and forth and the this and the that, and it's a high rate. And we're just like, geez, what is going on here?
Sure.
Until finally, we put our foot down. We're like, hey, you guys committed to doing this loan. You guys either do it or we're going to find another way, because this is just ridiculous. So thankfully, David stood up to Goliath, and we were able to win a little bit there. But man, it's been challenging for sure.
Yeah, I'll tell you what, since I mean, to give if you're new to commercial real estate and finance, you know, commercial real estate is typically valued on the cash flow. I mean, most of the time, unless there is an apples to apples sales comps or it's a lower valued property,
Yep.
typically it's based on the income that's coming in. And a large percentage of those deals have been funded traditionally by small local banks that have disproportionately been affected by, these changes in rates,
Hmm.
which, they put a lot of money into these 10-year treasury notes at what, a quarter or 0.5%, and now they're trading at 4.5, which certainly puts a damper on their returns and on the value of those assets. So it seems, over the last year, I was telling you, Tom, that we've had a huge uptick in requests for commercial loans, and that was kind of a surprise on assets that are pretty good. A lot of times they've got good cash flow.
Hmm.
They're in decent markets, but there's just not the liquidity that we saw just a few years ago. And while the 30-year fixed mortgage rate is still ticking along and seems to be creeping down, commercial is not so fortunate, I'd say.
Hmm.
What have you seen, maybe in the last 3 months, 6 months, over, that is different than, obviously, different than the 4%, fixed rate, high leverage loan that you might have
Sure.
seen 5, 6 years ago? Go
Sure.
ahead.
Well, just back to my example of our small expansion loan down in North Carolina. Um, Josh, we literally went to like 25 lenders to try to get a $500,000 loan, on a $5 million property. I mean, there's another loan in first position, so don't get me wrong, but still, we own that separate parcel free and clear. So anyway, so I think a lot of banks are just kind of pencils down on certain projects. It doesn't matter what the numbers look like, doesn't matter what the operator's experience is. They just get a memo from up high that says,
Right.
we're not lending on that anymore for whatever reasons. And so, what I've always, chuckled about, and I probably shouldn't laugh, but like, I feel like it's those commercial lenders a lot of times that cause recessions to happen. It's like,
Yeah.
oh, see some bad things coming in the future. Let's stop lending. In other words, let's shut down the economy, right? Because we need those loans to keep, hiring the people and doing the deals and blah, blah, blah. And so I feel like it's almost a self-fulfilling prophecy for the lenders, because we've seen this in the past, right? They like, they go pencils down, and then it's like, okay, well, I guess we're not doing that project. We're not spending that money into the economy. We're not hiring those people. We're not, and so it just,
Yeah.
and then all of a sudden, whoa, surprise, the economy
Right.
is down. So
Right.
yeah, we've definitely seen a lot of that, having to shop around to a lot more lenders. And frankly, taking on the chin a little bit in terms of the terms that we're seeing out there. But we're continuing to move forward because we think there's a lot of value right now in the market. If you're selective and diligent, you can still find good deals out there.
So with Bellrose, you do a lot of private equity, capital raise and
Mhm.
things like that. Has that changed at all, or are you still, you got people lining up to throw money at you, or?
Sure. Well, again, I mean, a few years ago, yeah, we did. We would put out an offering to raise equity
Yep.
for a self-storage deal, and we'd be oversubscribed in a matter of 3-4 weeks. But these days, it's like we'll put a deal out and it'll be like crickets.
Yeah. Yeah.
It'll be crickets. We're like, what happened? And so we have to get scrappy. We gotta get on the phone. We gotta do the coffees and the lunches and the more of the face to face, more hand holding kinds of things. Because I think our investors are typically high net worth people, accredited investors, who are just concerned about where we are in the economic cycle. And when people are concerned or they're confused,
Yep.
they say no.
Yeah.
And so even though, what we're espousing to our investors these days is, hey, with inflation the way it is, you can't stick your money in the mattress, right? Because it's just losing value every single day. So you got to put it in the marketplace, which I know is scary. So go with something that has a big capital preservation aspect to it. So real estate, invest in multifamily, invest in, of course, we're telling them to invest in self-storage. Lending. I mean, I personally do a lot of lending, like in my self-directed IRA and otherwise. I love clipping those coupons each month,
Right.
secured in first position. That's a great place to be.
Yep.
Right now. But I think, a lot of investors who haven't had my level of experience and whatnot, even though I try like heck to share with them, you can't just sit there. You got to get out there and do something. And a lot of people still just, they just kind of hang back, or they stick with what they've always done, just sending their money to their brother-in-law, financial advisor, or whatever. So yeah, it's definitely been challenging.
So the market's been, continually up until 3 days last week, when all of a sudden the sky was falling and things have recovered pretty well.
Yeah.
But it's interesting how many people are, it seems like a lot of people are gun shy on assets in general. And it's to say that we don't have an asset bubble, I think is, naive at best. However, the inflation that we've got going on here, just last week, they readjusted the jobs numbers all the way back till April of 2023 and adjusted them downward by almost 1 million jobs. We can't even count on, the numbers that are coming out of the government anymore.
Yeah. No.
It makes me laugh sometimes. What do we get? Inflation finally came down below 3%. It's at 2.9%, 50% higher than target rates, right? But those are government numbers that they keep changing and flipping out the different industries to make them work. And I think anybody that looks around would agree.
Yeah. Hey, go to the grocery store and tell me inflation's 3%, right? Go to the gas pump. Tell me inflation's 3%.
Yeah.
Give me a break.
Yeah. And really the only things that are keeping pace with, the cost of living, real estate is one of those fantastic assets that just keeps climbing and climbing and climbing. And, I think that there's got to be a ceiling, at least in the single family market, for that. But with these assets, I have storage units that, not that I own, but that I rent out for all the crap and, that I've got. But, I just got a notice last month that rates are going up, the cost is going up. And it seems like everything at this point, the costs are going up, whereas the returns are, either stagnant or not in a lot of industries. Excluding real estate. So how are you able to find good deals? It seems like there's we have an inverse ratio of, competition when the market is hot, and then it cools off and financing is tough. Have you seen an uptick in the type of assets or the quality that you're looking at?
We've been active in the marketplace, in the ups and the downs and, everything in between. So, we're definitely still seeing deals out there, but we just this past week, we had a couple sellers that we were well down the path with, negotiate. We weren't at contract yet, but, they pulled out. They said, hey, we don't really like where we're at right now. And, they had kind of a, kind of a gut check moment. And they were like, I'm just going to hold on to this for a little while longer. Who knows? Maybe that's smart. Maybe it's not. But it's definitely challenging. When the market was rocking and rolling a few years ago, we had a few exits and we were returning, 30+% to our investors because things were just rocking. Well, we just sold a deal a couple of weeks ago down in Florida, and we were really excited that we delivered 13.5% returns to our investors, just because things in self-storage as well as other asset classes are challenging right now. So, we had a good cash flowing asset, on real estate in a growing market. But there was a lot of competition coming in. And then plus, we felt like we had executed as best we could on our value add strategies, and there wasn't a lot of juice left to squeeze there.
Sure.
So we decided to exit that asset. And our investors, I actually, just before I got to the office here, Josh, to talk with you, I had an investor call me and say, hey, thanks for returning my money on that deal. Do you have anything else? So now he's rolling into our into our next deal. So we'd love to see that.
Well, and a 13.5% basement isn't so bad,
Yeah,
right?
right.
That's pretty good return.
Yeah, for sure.
Yeah,
Yep.
I was telling you about this place in West Virginia that we're doing an expansion funding for.
Mm-hmm.
It's storage as well, and this guy went through 3 different commercial banks that halfway through or 3/4 of the way through the underwriting process,
Mm-hmm.
they just pulled out of the space. They just pulled out, and then he was working with somebody in Florida that took a huge due diligence fee and then just stopped returning his phone calls. So I mean, it's pretty crazy. I mean, I guess
Yeah.
that's just the time we're at in the market, that
Yeah.
you see what you got. But I've been looking at a lot more storage lately, and it's interesting to see the analytics on these things and what
Mm-hmm.
what type of returns they get, what kind of overhead, and on a typical commercial building or multifamily, a bank's going to underwrite that with minimally 45% operating costs, right? I mean, including your value, your
Yeah.
the value add and all that kind of stuff. But
Sure.
with storage, it seems like a lot lower. I mean, it's more like 35%, isn't it?
That's right.
Yeah. I mean, it's really I don't know. I think it's a
Yeah.
really interesting industry where you've got, fewer moving parts.
Mm-hmm. Well, yeah, and like I mentioned earlier, Josh, I mean, that's why we think value add self storage is a great place to be right now for investors who are interested in capital preservation, because your capital doesn't get preserved too well if you're in a risky asset class and the loan defaults and the bank and the lender takes the property back, right? So if you go out there in the world, and this data is all over the place for folks to find, but if you look at default rates on commercial loans, of course, these days you got hospitality, you've got office, right? Office is in a tough spot. You've got retail, right? Everything's going to the internet. And then, there's a big drop off and you get to multifamily and then industrial, and then self-storage doesn't even show up on the chart, Josh. It's approximately zero. And that's, again, one of the things we really like to let our investors know is, hey, we might not hit a great return, even though 13.5% I think is pretty darn good. We might not be in a 30% return environment right now, but at least you're going to have a cash flowing asset that's not going to go to zero, like my internet stocks did back in 2002.
Well, it's so interesting that you bring that up, because I mean, this is a little tangential, but you see a lot of these artificial intelligence stocks, these AI stocks, are going through that same cycle. And it's like, if you pick the right one,
Sure.
you can be rich with a really small investment.
Mm-hmm.
But if you pick the wrong one, your investment's going to zero.
Sure.
So, it's a different, should be a small percentage of your portfolio, whereas, you can put a lot more into these long-term assets that are going to give you predictable returns. So it's kind of cool.
Sure. Absolutely. And that's actually one of the things I love about real estate, Josh, is you can create as an investor. Like if I have my investor hat on, not my self-storage hat on, I can create, and I have created a predictable investment portfolio that gives me all the things that people are wanting, right? Capital preservation, income, growth, tax advantages, just by investing in different classes of real estate and in different ways, right? So I do some lending, like I mentioned. I get that helps me hit my cash flow goals, right? And then I invest in like some really solid assets like multifamily or self-storage, and that gives me some capital preservation, but also a little bit of growth potential. And then I do have some risk capital, right, that I invested recently in a real estate technology company. Who knows? It might be a zero, or it might be a total grand slam. But that you can create that kind of portfolio with a lot of transparency in real estate if you're working with the right operators and you have your right goals and objectives out in front of you. You can do that. So that's one of the things I love to help folks do.
Yeah, absolutely. Do you, again, another tangent here. We're here in the middle of August, and just a few days ago, this new NAR settlement went into effect, where buyers agents, they can get paid by the seller, but there's a lot more paperwork. There's a lot more negotiation that is kind of behind the scenes that has to go on. First of all, do you work with agents typically when you're looking for these? I know it's commercial, but so, it's a little bit different, but
we do work with agents when when we're selling. We, on the buy side, we're typically just representing ourselves. But although the property might be a listed, marketed property from a broker, we don't employ a buyer broker.
Gotcha. Okay. And as a follow-up, what do you think the outcome of this this whole settlement and the change in rules? Because I think technology in real estate has been lagging quite a bit, except for maybe a lockbox app or a shared MLS. There's not been a lot of technological advances in the space.
Yeah.
Yeah.
I'm not sure, Josh, but what I do know is over time, right, entrepreneurs figure out a way to get things done, even when, Big Brother is coming in, trying to tell us that you can do this or you can't do that, or, entrepreneurs, and especially, if I'm a buyer real estate agent, I'm going to find a way to get paid. I mean, they're bringing value, or if you're bringing value to the marketplace and you're creative, you can find a way to make things work for everybody. So, I personally, buying a house or buying a self-storage facility, that's a big transaction, right? So I think you want to have some real life person. I think maybe I'm old school, but you want to have a real life person who's a great advisor and experienced, and to help you through that process. And because I think, to me, there's value there. Maybe other people, maybe younger people buying their first house in their 20s or whatever, maybe they're okay just clicking a couple buttons and spending $250,000 on a house. I don't know. I guess maybe eventually we'll get there with AI and with video and technologies and things like that. And as long as we're going on tangents, so my business partner Joe Downs he went to St. Joe's Prep down the city, and one of his buddies, Craig Stack from St. Joe's Prep, started a company out in Silicon Valley called TruePick. He started this company many years ago, and it's like taking off. TruePick is a technology that can validate and verify when and where a picture was taken or a video. So it can tell the difference between an AI video and a real video. It can tell the difference, Josh, between like REO photos that are real and REO photos that have been doctored or are fake or weren't photos of the house that they're saying it was.
Oh, that's great.
So his customers are a lot of insurance companies and lenders and things like that. So his company's kind of growing through the roof. But anyway, going all kinds of good tangents today, Josh.
That's fantastic. So that's really interesting. Was it Red? What was the name of the company? I forget the name of the company off the top of my head, but it was a tech company, very much like Zillow, where they were they were buying the properties. They were looking at doing, essentially flips, but they were buying it maybe 80% when they should have been buying it 50, and using tech to allow people to buy and sell their house at the same time, get financing, all that kind of stuff. And what they realized is the number of variables was so large that they just lost a couple $1 billion,
right?
Right. And it's one of those deals where like this industry is so varied. Even when we're underwriting loans, there's probably 30 different variables that go into every single loan. That doesn't include walking into that house and rehabbing it and opening up a wall and realizing that there's termite damage or there's structural issues or there's, you fill in the blank. But it's, just being able to identify whether or not the photos are the right, are from the right property or at the right time. That's a big deal. And I'll bet you, I, I venture to guess that if they'd had that during 2008, there would have been more people in prison.
Probably right. Yeah. But hey, bringing it all back around,
Yeah.
to real estate and investing and lending and whatnot. I mean, I think that's the beautiful thing about real estate, but also the challenge of real estate is it is an inefficient and fragmented market, right? It's not like, talk about AI and, flash trading on the stock market, making a penny here and there, right? Because that market is so efficient. I mean, how does a regular retail investor make money in the stock market? I mean, you can't make that extra alpha, they call it, right? But you know what? You can in real estate. If you connect with a good operator and you're a sharp investor, you can find those deals where there is that alpha, that big outsized potential return. So
Yeah.
it's a double-edged sword, as
Well,
that big company found out, losing billions.
and
But
it's a way for people like us that have been in the business to add
mhm,
value to the transaction.
yeah,
And it's very unlikely that
mhm,
portions of the industry will be outsourced to artificial intelligence and all that kind of stuff. But when
mhm,
you have a very complicated process and a very complicated product, it's
mhm.
really hard to outsource all of that to a non-thinking machine or even a thinking machine.
That's right.
Yeah.
That's right.
Yeah.
Yeah, I mean,
That's
if
fantastic.
I can do a shameless plug here, Josh.
Please, please. Yeah. Plug away. Plug
So
away. We love it.
our website at bellrosestoragegroup.com, we have a document there that's for free for anyone that wants to hop on there and grab it. It's called the Safe Investing Method. Of course, investing isn't safe, but SAFE is an acronym. S stands for sponsor, A stands for asset, F stands for financials, and E stands for exit. So I think what we were just talking about is who's the sponsor on the deal, right? Who is running the show? You better hope that they're experienced and they know where to find that alpha,
Oh yeah.
and they've been around the block a little bit. It's not just a computer program. So
Well, yeah,
um,
the Twitterverse is alive with lots of sponsors that were not doing the right stuff over the last couple of years or were
yeah,
inexperienced, and it really comes back to bite them. But
sure. Sure. And
yeah,
as experienced as we are, we've certainly had our challenge. We've had our challenged facilities that we've had to really hunker down and get them pointing in the right direction because of the massive shift that, not only impacted us, but impacted, the whole industry, not even
yeah,
just self-storage, multifamily, everyone kind of took it on the chin there. But yeah, that's where you really need a sponsor that you can trust. Even if things are not going well, they're at least, trying their hardest. They've been through it before. They've got the resources, the people, the team to, get in there and try to figure things out and, protect your investment best they can.
yeah, absolutely, absolutely. Well, Tom, we're coming up against the clock here. If somebody wants to reach out to you and invest with you or pick your brain on something, how do they get in touch with you?
Sure, Josh, it's been great, buddy. It's great to be with you again. I'm Tom Dunkel. I'm the Chief Investment Officer here at Bellrose Storage Group. You can go to Bellrose, that's with one L, bellrosestorategroup.com. And you can find me on there. And I'd love to schedule a call and chat about self-storage or, Big Brother or whatever anybody wants to talk about.
I love it. I love it. Awesome.
Yeah.
All right. Well, we'll be back here next week. Thanks so much for joining us today. And until then, go make some money. Take care.